Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down, and check to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, guys, let's get started. And today is Saturday. It's May 31st, and it's approximately 4:30 p.m. Eastern time. Today is a very important day. Tomorrow is going to be a very important day. Today's an important day because we have the monthly candle close, and tomorrow is going to be the weekly candle close. So we have to pay attention to see how these candles will be closing. So today we're going to start off with the monthly, and what I need to tell you here about the monthly is we've been bearish. The stochastics have been going down. We are far away from the 21-day moving average, which is currently at 67,760. I'm not liking that. Something else I'm not liking is, as you can see here, we had wicks, we fell. Here we had a wick, we fell. Then we had the red engulfing candle. We're trying to make it back up, and we couldn't pass this resistance. We're stuck here, right across here. So this is giving me bearish vibes, along with the 21-day moving average being low and the stochastics being low. Now, what can I tell you that looks bullish? What looks bullish is that if we zoom into the stochastics, it kind of looks like we're trying to curve. And as you guys can see, this blue line, they're already curved up. So it's possible that maybe we just do a U-turn here and we start going up, and all of a sudden we will start becoming more bullish. Something else that I'm liking is, again, even though this is rejecting here, this is still a green candle. So if we could close green, that's a green month. Last month was a green month. From coming from these two red candles, this is also pretty good. We're reclaiming ground here. Another thing is, if we draw a pattern here, now it kind of looks a little bit more like we're in a flag here. And this could also end up being some type of a descending triangle here, where maybe we come down to here, we come back up, and eventually we break out. I wouldn't want this to continue coming down, because then the bottom of this flag is going to be like around 83. But you know, if we reject here a little bit and get a little baby maybe red candle, and then we stay up here and we break out, would look like we would have to go sideways for a little bit. But that's looking kind of bullish to me. So let's see what ends up happening there. One thing that I'm not liking though is that we kind of look like we have a little bit of bearish divergence here on the monthly. So if you see from this point, let's say to this point, you can see that we're straight. But then if you see here on the RSI, from this point to this point, we're dipping down. So that means even though the price has been going up, the money flow has been coming down. So it's not sustainable. So this could show more downsides. Again, it's very important to see how this monthly candle is going to close, and especially the next one, because we could also on the RSI continue pushing up. Look how high these humps are, and the stochastics could be making the U-turn, and maybe it doesn't end up being a bearish divergence. All right, we head over now to the weekly. The weekly does look more bearish to me because the stochastics are already up here. So once we're up here, at some point we have to come down. So what we have to hope for is that we're going to continue dragging here and then eventually fall at some point, or if we do fall, we curve back up. We are far away from the 21-day moving average, which is currently at 93,844, and tomorrow is when this candle closes. But so far we do have a red engulfing candle. I'm not liking that. We had 7 green candles in a row. Of course, eventually we have to get a red one, but I wouldn't want to see this red engulfing one. I would want to see more of a red indecisive, and we're more up here. So I'm hoping that maybe between today and tomorrow we could come back up maybe to like 107,000, 108,000, and we close red, but it's not too bad. So we have to see what ends up happening here. Another thing is, again, we couldn't get up of these wicks. We ate these wicks, but then we couldn't get up any higher. So this could end up being also a M pattern. So this will be the beginning with this candle. So very important to see what happens tomorrow. We head over now to the 3-day. We see that the stochastics are on the way down. It's possible that we could curve back up. Again, we are far away from the 21-day moving average, which is currently at 96,914. We're coming off of a red engulfing candle. Even though we're wicking up here, this candle closes in about 2 days. So we have to see what ends up happening here. We head over to the 2-day. The stochastics are on the way down. So at some point we're going to have to curve up, and we are close to the 21-day moving average, which is currently at 101,700. And this candle closes in a day and 4 hours, and so far we're wicking back up. So if we could go back up and maybe eat this red candle with a green engulfing candle, that would be bullish. So far this isn't looking too bearish to me. me. It's just that the stochastics are on the way down, but the RSI here a little bit pointing upwards, so who knows what ends up happening there. We head over to the daily chart. On the daily, what's bearish is that we're below the 21-day moving average. We close one candle, two candles below the 21-day moving average, and this could possibly be the third candle. We do have 3 hours and 25 minutes before this candle closes. We are wicking up, so to me also the stochastics here are getting very low. Even though they could drag here for a while, eventually we will be going up. The RSI here is starting to point up, so maybe we do get that. Remember, we do have the golden cross, and I've told you guys before the golden cross happened, it's possible we could dip after the golden cross before we move up. Now if you guys zoom in a little bit more, these moving averages, which is the 80 and the 100-day, this purple and yellow line, eventually should cross, just like how this red 50-day moving average crossed the 200-day moving average. That's going to be bullish. So a scenario that I'm seeing right now is that maybe today we close green, and maybe we try to test the 21-day moving average, and maybe tomorrow as well, maybe we go past the 21-day moving average, and we just play a little bit sideways here and wait for the 50-day moving average to touch price. And I feel like once that touches price, the 80 and the 100-day moving average would have crossed the 200-day moving average, and I think from there we could blast off. So it's possible we have a couple of still bearish days, but it's more like sideways. That's what I'm really hoping for. Now if I put on the patterns, I drew this falling wedge on the 4-hour, but obviously we're seeing it here on the day, and as you can see, it's been tracing the falling wedge, and this is a good sign, this green candle, if we do close, that we're going to get back into the pattern. If we could do this, and like I said, we continue going sideways, even though the bottom of this would be like 101, it would let the 50-day moving average touch price, and then maybe we could blast off. And the measured move to this right now, I might have to move this down, so it'll probably be less, but right now it's currently at 116,000. It'll probably be like 115, 114 if I move this down, but let's see what happens. Maybe we got a break and I don't have to move this measured move. Now if we head over to the 22-hour chart, we see that the stochastics are low. What's bearish here is that we are below the 21-day moving average and now the 50, but again, we're having a ring candle here that could bring us back up. This closes in an hour and 21 minutes, so let's see how that closes. I'm liking the stochastics being low. I'm liking this RSI pushing up. We head over to the 8-hour chart. Stochastics are low, looking to come back up. We are below a lot of moving averages, but look, we got saved by the 100-day moving average. We're on the way up with green candles, so that's very important because that keeps us away from this 200-day moving average, which is at 94k. We don't want to see that. Head over to the 4-hour chart. The 200-day moving average has saved us here. We wicked up from the 200-day moving average, which is at 102,778, and we're looking to test the 21-day moving average, which is at 105,754, and the stochastics are on the way up. So this is starting to look more bullish to me, especially since we didn't lose the 200-day moving average. When we put on the patterns, we see we have been tracing this new falling wedge pattern that I made. I told you it's possible that we could fall out, but we could come back in, and that will keep it bullish and the pattern intact. And as you can see, we are back into the pattern. So let's see what ends up happening here with that. We head over to the 1-hour chart. It's bearish because we're below the 200-day moving average, but yesterday we were below everything, all these averages. We reclaimed the 21-day moving average, we're flagging out, and now we're looking to reclaim the 50-day moving average. So this is starting to get a little bit bullish for me. If I head over to the 1-minute chart, we see that we reclaimed the 200-day moving average and the 21-day moving average. That's bullish. We reclaimed it on the 3-minute chart here, even though here we fell below, but we're currently kind of above. On the 5-minute, we're above the 21-day moving average. We do have to be careful because it looks like we're starting to lose it. On the 7-minute, we're also above. On the 15-minute, we're above the 21-day moving average, which is bullish, but we're currently below the 200-day moving average. So we have to look at this time frame because we need to get above this 200-day moving average so that we could start getting above them in all the other time frames. So it's very important to reclaim this. So right now, overall, what I'm thinking for Bitcoin is we're going to continue playing in that range that I've been telling you guys, from 103,000 to 110. So far, I don't think we've fallen below 103,000. If we did, it wasn't for that long. If we do lose 103, we have to maintain 100. If we lose 100, we're going to play in the 90s. Hopefully, we do not go lower than 98k. If we go lower than that, we could even go down to 93, 90, and then that starts opening the door for the 80s and 70s. But one thing at a time. So far, we do have the 4-hour holding us here like a fort, and we're not falling down yet. So I'm looking to see if we could reclaim some ground. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you in the next chart.